Good morning, traders. Welcome to an AT Market Snapshot. I'm going to have a look today, look back in time, bit of a hindsight trade, but I wanted to focus in on euro dollar. I just want to have a look at the range that's been developing over the past few weeks, some of the trading opportunities, and in particular just focusing in on one of the setups here from our stochastic indicator. So euro dollar from a fundamental point of view, last couple of weeks you've got Christine Lagarde, Jerome Powell, both tracking on a fairly similar trajectory, both remaining fairly hawkish, which has provoked a little bit of euro strength, but also on the counter side of that, of course, we've still got that flight to safety in the dollar. We've still got a particularly hawkish Jerome Powell, and we're still seeing that kind of real head-to-head. So no particular surprise here, but this chart's moving sideways. A dollar at the moment just winning the battle, not particularly from a central bank perspective, but more so here it's that flight to safety as we see the indice market, certainly over the last few days this week, have an aggressive move lower and continuation of that ever weakening picture within the indice markets. But despite that, within this range there are some trading opportunities, and I just want to focus here on this hourly chart. We can see the upper levels, these highs that I put in place, and then some of the lows which we're looking at down towards the bottom of this range. Now with our stochastic along the bottom here, you've got two options. You can either go for a fast stochastic, which is a 533, or a slow stochastic, which is a 1066. Now I'm going to focus in here on a 533. It generates slightly more signals, slightly quicker signals, arguably less confirmed, but in this instance here, a nice opportunity and some clean signals which I want to draw into focus. So three opportunities with a stochastic. You've got overbought, oversold, bullish and bearish divergence, and then the crossover. Now excuse me, I would suggest with stochastics you need to see all three signals. Okay, all three signals. Now as we had our first move up towards these highs, and we're looking at this first interaction here, we came up close towards the primary high, these primary levels, and that was the first time we found ourselves in this overbought region. We then had our next leg up, which took us up towards the absolute high, or eventual absolute high of this move, and we saw our second signal come in. So we've gone from overbought, we've now generated that bearish divergence. I've got higher highs up through here on my price, and I've got lower highs here on my stochastic. The third signal, of course, and ultimately the trigger, the catalyst for you to take this position, the crossover, and we're looking for the crossover of percent D crossing below DN, which this is white crossing below this red hash line. Now that crossover signal, in theory a green light to take this position short. However, always ideal to wait for primary confirmation in line with that secondary signal. And just trading up at the top here, we saw this lovely shooting star formation opportunity again, primary confirmation for us to look to move short. Should you wish for more confirmation than that, also opportunities I think to have placed in this trend line coming up through here. So just drop that trend line in. I've got this first touch, second touch, little false break, third test here, bounced off. Gave a little false break, but nonetheless once broken did move lower. Had you wanted even further confirmation than this, you could have been looking at this support level, just running through these lows. So previous highs failing once, twice, breakthrough. We just tested it once, twice, three times, four times here before we got the eventual break. So increased confirmation here. One, of course, the stochastic signal coming right at the top of this range, but then the primary additional confirmation with a bounce off resistance, formation of shooting star, and then break of trend line and break of support for opportunities to sell on the break of this level. Stop losses, still trading just up through these highs with a target back down to the next low. Now with any range, you're well within your rights to sell off the highs and look for opportunities to buy at these lows. Okay, now I just want to look at what the difference was and why perhaps we wouldn't have wanted to buy at these lows. So we're same setup in theory. We make our way down, we find the bottom of this range. I think arguably you could have had these lows. I've put in this level through here just because of these retests here. I think you've also got grounds to suggest perhaps this is a potential low. If we're looking at where we started this range from this high up through here, this is the first low that was formed, so really technically should be part of this range. Either way, when we come down towards this first interaction, yes, we have the same signals in terms of we're at the support level, and yes, we have this bullish engulfing formation, so primary candlestick. What we are missing from a secondary point of view is the divergent signal. So we find ourselves oversold. Fine, signal number one, we get secondly oversold here. we do then obtain the crossover, but what we haven't got is that bullish divergence. Okay, that momentum here still increasing, still intensifying as we make a lower low on the price. I've got these lower lows down here on my stochastic, so no trigger there. We don't tick all three of these boxes which we saw for the bearish reversal up at the highs, and in fact as this market sells off, it continues to accelerate. We can see that stochastic here continuing to move lower. Now we've made our way right down to the extreme of this low range. Now we can see the little break. We had a break through this level and a retest here, which is suggesting still continuation and dollar strength. And of course that's going in line with the risk off tone we're seeing through the indice markets. But we are now just hesitating. We've got this consolidation here at this current low of the range. So opportunity is still in play here. I think we are now in a position to have our divergent signal. Okay, we'll just copy this line from here, we'll steal this across. We can see these lower lows coming in. So lower lows on the price, higher lows here on the stochastic. No crossover signal yet. Still waiting here for this to move down. It doesn't need to come into this oversold region, but we certainly need to see this %D line cross DN, so why it's cross back above through the dotted. So no green trigger, green light to go long yet. So two trade opportunities available to us here. One, I think, is we do see the rejection of these lows and we come back up perhaps through this resistance highs to take us back towards the top of this range. Alternatively, we've got opportunities, I think, should the lows here break, to see a continuation for euro dollar, and perhaps we see this move down and have a run and a test of these lows set back sort of mid-June, 15th, 16th of June, something like that. Okay, so nice opportunities here in euro dollar. Stochastics here leading the way, enabling us to capitalize in a sideways market. I've got secondary signals, and most important of all of these signals, they are confirmed by our primaries supporting this. Okay, so be cautious if you're going to try and buy into these lows here at the moment. Wait for that primary confirmation, wait for a clear change in direction and a move back up through resistance before you start to look to get involved. Okay, so a little bit of a look back in time, but nonetheless some great signals here in euro dollar, some opportunities to trade and capitalize within a market where we are lacking any clear trend direction. Okay, right, that's all from us here for now. Please do join us again for another Market Insights.